All right, let's dive in. We're taking a close look at the Pakistan cement industry today, specifically their earnings forecast for the second quarter of fiscal year 2025. We've got this report from Topline Securities dated January 17th of this year, and it really caught my eye because it shows rising profitability, like a surprising jump of 7% compared to the previous quarter. The interesting thing is, this growth is happening even with lower cement prices up north. Kind of a head-scratcher, isn't it?
It is, yeah. It seems like we're seeing this kind of interesting interplay of different factors. So while lower prices in the north are definitely boosting demand there, it's actually government projects in the south that are really driving the overall demand. And that's even with stable prices down there. It points to, a market that's regionally diverse with its own unique dynamics.
So like two different stories playing out, one in the north and one in the south. I'm curious, what's the overall impact then on the industry's health?
Well, this report suggests that the sector is pretty robust overall. Domestic dispatches, which is basically the amount of cement being shipped and used within Pakistan, that saw a huge increase, like 23% compared to the last quarter. And if you combine that with the jump in capacity utilization to 61%, meaning cement plants are operating closer to their full potential, it indicates strong demand and potentially higher profits for these companies.
Okay, so more demand means companies are ramping up production.
Yeah.
But what about the cost of making all this cement? I know coal is a major factor in cement production. What's the report saying about that?
Yeah, so the report actually highlights a key difference between the North and the South. The South relied on Richards Bay coal, while the North used a mix of Afghan and local coal. Interestingly, though, Richards Bay coal prices have remained pretty stable, averaging around US $110 per ton, which is good news for the producers who rely on that source.
Stable coal prices? Yeah, that sounds like a welcome relief. Now, on to the companies themselves. I'm sure you're wondering how specific companies are doing in this environment. Let's get into some company-specific insights, because there are definitely some standout performers and some that are facing some unique challenges.
Absolutely, yeah. The performance varies quite a bit. It really shows how important it is to understand each company's unique position in this market.
So let's start with Lucky Cement, or LUCK as they're known in the report. They're predicting an 8% year-on-year increase in their consolidated earnings. But this is mainly driven by their subsidiaries, especially Lucky Motors. Their core cement business is actually projecting a 6% decline year-on-year. It seems like their diversification strategy, investing in businesses outside of cement, might be helping them weather some of the ups and downs in the cement market.
That's a really good observation. Yeah, diversification can definitely provide stability in markets that are unpredictable. It's almost like a safety net in case one part of the business takes a hit.
Makes a lot of sense. Now, in contrast to LUCK, we have Kohat Cement, or KOHC. They're projecting a massive 45% year-on-year profit growth, mainly due to higher retention prices and lower raw material costs compared to their competitors in Punjab. And just to clarify for our listeners, retention prices refer to the prices that cement companies sell their products to distributors. So higher retention prices mean better profitability for Kohat Cement.
Exactly, yeah, that's a good clarification.
So Kohat Cement is doing exceptionally well, but their success is tied very closely to their cement operations. I'm wondering, isn't that a risky strategy in the long run?
That's a really good point. While they are riding this wave of favorable market conditions right now, any shifts in demand or pricing could really impact their bottom line. It's a classic example of the risk-reward equation. Higher potential for profit comes with higher vulnerability to market fluctuations.
Interesting. Let's move on to Fauji Cement, or FCCL. They're also reporting solid growth, with earnings projected to be up 29% year-on-year. What's driving their success?
Well, their success is mainly attributed to a combination of higher domestic dispatches and increased retention prices, similar to Kohat Cement. But they are also benefiting from lower finance costs, which further boosts their profitability.
So it's like a combo of positive market factors and good financial management working in their favor. Now, what about DG Con Cement, or DGKC? They seem to have a real turnaround story.
They do, yeah. DGKC is projecting a remarkable turnaround. With earnings up by, get this, 3.5 times year on year, they've seen big growth in domestic dispatches, coupled with those higher retention prices, and lower finance costs, all contributing to this substantial improvement in their financial performance.
Wow, 3.5 times growth. That's impressive. Finally, let's look at Maple Leaf Cement, or MLCF. They seem to be facing some headwinds.
Yeah, they are. MLCF is projecting a 29% year-on-year earnings decline, primarily due to lower domestic dispatches and increased raw material costs. They are expecting a quarter-on-quarter improvement, though, thanks to a recent increase in domestic dispatches.
So it seems like they're working through those challenges and hopefully turning things around. It's really fascinating to see how each company is experiencing this generally positive market in different ways.
It is, yeah. It highlights the fact that the cement industry isn't just this like one big thing. Each company has its own story, its own strengths and weaknesses, and investors need to look beyond just the overall trends to understand the nuances of each company's performance.
Okay, so we've covered the overall industry trends and zoomed in on some specific companies. But this report really just gives us a snapshot, a look at the short-term outlook. What about the bigger picture? What broader trends should we be paying attention to when looking at the Pakistan cement industry?
That's a great question, and it's one we'll get into in the next part of our deep dive. We'll explore the potential risks and opportunities that are out there, considering things like infrastructure spending, urbanization, and the overall economic landscape of Pakistan.
Great. We'll take a short break, and then we'll be back to explore the long-term implications of these trends and what they might mean for the future of the Pakistan cement industry. Welcome back. We just unpacked some really interesting company-specific insights, but let's zoom out a bit and look at the bigger picture. We've seen this robust demand in the Pakistan cement sector, driven by both government projects and rising domestic consumption. So what does this tell us about the overall economic landscape in Pakistan?
Well, it definitely suggests a growing economy, particularly one with a strong focus on development. The fact that government projects are driving demand in the South is especially interesting. It kind of points to a commitment to, investing in infrastructure,
Mhm.
which is a pretty classic strategy for long-term economic growth.
Right, and infrastructure development usually has a ripple effect, doesn't it? Like creating jobs and boosting demand in other industries.
Absolutely, yeah. It's this powerful multiplier effect. Think about it. When you build new roads, bridges, dams, you need a ton of materials and expertise. That means jobs for construction workers, engineers, manufacturers, not to mention increased demand for things like steel, concrete, transportation services. This focus on infrastructure could have a really significant positive impact on the Pakistani economy as a whole. And obviously, by extension, on the cement industry, as the demand for their product is likely to remain strong.
Yeah, it's amazing how interconnected everything is. But it's not just about government spending, is it?
Yeah.
We've also seen this increase in domestic consumption. What's fueling that trend?
It's probably tied to rising incomes and rapid urbanization. As people earn more, they tend to spend more on housing and construction, both of which obviously rely heavily on cement. It's a natural progression as a country develops. People move to cities seeking better opportunities, and the demand for housing and infrastructure just naturally follows.
So we're seeing this convergence of factors, government spending on infrastructure, private investment in housing and commercial construction, a young and growing population, all pointing towards a pretty positive outlook for the Pakistan cement industry. It almost sounds too good to be true. Are there any potential risks or challenges investors should be aware of?
Well, there are always challenges, right? No industry is completely immune to risk. One major factor to think about is the volatility of raw material prices. Cement production is a really energy-intensive process, and the costs of coal, electricity, all those inputs can fluctuate a lot. This can squeeze profit margins and make it harder for companies to predict their future earnings accurately.
We've seen how stable coal prices have benefited the industry recently. But you're right, there's no guarantee that this stability will continue. What other potential risks are on the horizon?
Hmm. Well, competition is another thing to keep in mind. While the Pakistan cement industry is pretty concentrated right now, there's always the possibility of increased competition, both from domestic and international players. If demand weakens or new players enter the market aggressively, it could put pressure on pricing and eat into those profit margins.
So it's a reminder that even in a favorable market, companies need to be flexible and adaptable to stay competitive. Anything else investors should be thinking about?
Yeah, one more thing to consider is the regulatory environment. The government plays a big role in the cement industry, and any changes in regulations or policies could impact the sector's profitability. For example, the government could impose price controls, increase taxes on cement production, or even introduce new environmental regulations, all of which could affect a company's bottom line.
So it sounds like navigating the Pakistan cement industry requires a really deep understanding of both the economic and political landscape. It's a complex picture, but there's also a lot of potential for growth and innovation. We've explored the company performances, the overall economic climate, and some potential risks. So what's next on our deep dive agenda?
Well, now that we've laid the groundwork, it's time to look ahead. In the final part of our deep dive, We'll consider the long-term outlook for the Pakistan cement industry. We'll discuss the key factors that will really determine its success in the coming years, including the trends we've already discussed, as well as some emerging factors that could change the game completely.
Okay, I'm ready to look into the future. We'll be right back after a short break to explore those long-term trends and see what's in store for the Pakistan cement industry. All right, we're back for the final part of our deep dive into the Pakistan cement industry. We've looked at the current market, the economic forces, some potential risks. Now let's look ahead. What does the long-term outlook hold for this industry?
Well, the future of the Pakistan cement industry is really tied to a few key factors, many of which we've already talked about. Infrastructure development is probably the most important one. Pakistan has these ambitious plans to modernize its infrastructure. Things like roads, bridges, dams, power plants, all those projects need huge amounts of cement, right? So that creates a steady demand that could benefit the industry for, years to come.
Yeah, it's like this domino effect. Government spending on infrastructure leads to more demand for cement, which then helps the cement industry grow and contributes to Pakistan's overall economic development.
Exactly. And it's not just about those government-led projects either. As Pakistan's economy keeps growing and more people move to cities, we're going to see a surge in demand for housing and commercial construction too. Both of those sectors use a lot of cement, which further strengthens the industry's long-term prospects.
So we've got this combo of government spending and private investment driving demand. But what about the supply side? Can the Pakistan cement industry keep up with this projected growth?
That's the big question. While the industry has definitely shown it can increase production in recent years, keeping that momentum going in the long run means they need to keep investing in capacity expansion and modernization. Companies will need to strategically invest in new plants, upgrade their facilities, and adopt those more efficient production technologies to meet the growing demand. They don't want to create bottlenecks.
So it's not just about pouring more concrete. Innovation is going to play a big role in the industry's long-term success. What kind of innovations are we talking about here?
There are some really cool developments on the horizon. One area is sustainable cement products. Traditional cement production is really carbon intensive, but there's this increasing focus on greener alternatives. For instance, some companies are trying out different fuels and raw materials. Others are investing in technologies that capture and store carbon emissions. These innovations are good for the planet, of course, but they also appeal to consumers who are, more and more environmentally conscious.
Yeah, so sustainability isn't just the right thing to do. It's becoming a smart business strategy. Are there other areas where innovation is shaking things up?
Definitely. Another exciting area is high-performance cement. These new types of cement offer better strength, durability, and resistance to, different environmental things, and they're being used in specialized projects like high-rise buildings, bridges, even tough environments. This shift to high-performance products is likely to boost the value of the industry's output, and it opens up new markets and revenue streams.
It sounds like the Pakistan cement industry is going through a real transformation, driven by all these factors from economic growth to sustainability and innovation. So what's the key takeaway for our listeners? What should they be thinking about when they look at this industry's potential?
I think the biggest takeaway is this. The Pakistan cement industry is at a turning point. It has a huge opportunity to help Pakistan's economy grow and become a leader in the region, a leader in sustainable and innovative cement production. But to make that happen, they need strategic vision, they need to adapt, and everyone involved needs to be committed to doing things well.
That's a great way to put it. It's an industry full of potential, but it also needs careful thought and a long-term perspective.
And for investors, it means doing your homework is really important. Don't just focus on the short-term changes. Look deeper into the companies, their plans, their commitment to innovation and sustainability.
Well, that wraps up our deep dive into the Pakistan cement industry. We've covered a lot, from recent earnings to the long-term outlook, and I hope you've all learned something about this dynamic and ever-changing sector.
It's been great sharing this analysis with you. Remember, the future of the Pakistan cement industry is being shaped as we speak. Stay informed, stay involved, and stay curious.
That's it for this episode. Thanks for joining us on the deep dive. We'll be back soon with another interesting topic to explore. Until then, keep learning and exploring.